So you are given the trial balance of Move Ahead Trading Enterprise, and you see it right there. You are required to prepare the trading profit and loss account and the balance sheet. Okay, so the first thing I'll give marks to is when you bring the name of the business. So Move Ahead Enterprise. We are preparing the trading profit and loss account for the year ended 31st December 2008. Okay, so like you know, we begin with the sales. Let me put in my currencies. I think my CD sign is okay. So I can copy and paste on the tray. Okay, so we begin with our sales figure, which is 85,000. I think all of you had that bit. We less return invoice. Less return invoice. Please assist me with the figures if you have them. So let me assign rules so that it will be faster. So Frank will be doing the calculation for us if we have to less or something. Sandra, please assist me with some of the figures if you see them. So we are looking for our returning what? And Alexia, you would assist Sandra in that. So returning was, okay, that's the sales returns. Okay, so the question used sales returns. So we're also going to use the same word, sales returns, and that is 4,900. So Frank, what will be our net sales?
$80,100 cedis.
Okay, 80,100. So I think each and every one of you should have that. Prof, actually, I didn't get your answers. I guess after the class, I'll push all the assignment you are owing me into your private page so you answer them for me. Okay, after the net sales, we go to the cost of sales, beginning with the opening stock. So opening stock. Yeah, I think there was a confusion with the date. As you see here, 31st December 2007, right? Now, the year you are reporting is for 31st December 2008. So all other things being for this 31st December 2007 is the same as 1st January 2008. So this is your opening stock. So the closing period of the previous year, okay, will lead you into the opening year, right? So 31st December 2007 is virtually the same as 1st January 2008. So always compare the year you are reporting and know your opening date and your closing date. So opening stock is 16,400. We add the purchases. And the purchases has some issues to adjust. So we'll put it down here, 45,500 less the purchases returns or the return outwards, which is 2,500. And do we have carriage inwards? Carriage inwards, carriage inwards. We have carriage outwards. That's not okay. Carriage on purchases. So carriage inwards is the same as carriage on purchases. That should be 3,000. So we adjust to get the net purchases. Frank, if you have done this, let's have our net purchases. Oh, Frank, we are waiting for your figure. Okay. Think we are struggling to hear him. So let me use. So we'll get 46,000. We add that to the opening stock to get the cost of goods available for sale. So we get 62,400 as our cost of goods available. As you know, we less the closing stock. Prof. Sandra, what is the closing stock? Prof. Damiki. How much is our closing stock?
19,500.
19,000. We less that, we get our cost of goods sold. We need to satisfy ourselves if we have any trading expense, which is yes, we have. So we would add the wages. The wages is 12,500. That's the only trading expense stated there. So when we add, we get our cost of sales, which is now moved under the net sales, giving us 54,500. So all other things being equal, we'll get a gross profit. $24,700, and I want to believe my professors had the gross profit correct. Okay,
Yes,
now we move on to the profit and loss account. And in the profit and loss account, we begin by adding the other income. So we add the following items. So we add the first other income. Yes, please assist me get the figures. That'll be the discount received. That's the first one. like I tell you always, your income should be at the credit side. So you go and pick the figures there. This is sales, this purchases, returns, return outwards. So the next discount received, that's other income. And I think we also have income from investment. So we have two. So let's put it here. In fact, sometimes you can put both of them at the credit third column and add. It wouldn't spoil anything. Let's put them here. So discount received and then the income investment, which is 1,900. Altogether, we would have 5,400, and that is added to the gross profit to arrive at the total income of 30,120. And we finish up with lesson operating expenses. I think each and every one of you should give me one of it quickly so starting from the top, we have Alexia. Prof. Alexia, your expense. I think you may have to type in the chat because we can hear you. So Prof. Sandra, your expense.
Depreciation of furniture and fittings.
Okay, depreciation of furniture and fittings. Alexia gave us bad debt. Okay, so depreciation furniture and fittings. So that is 5,000 Ghana cedis. Prof. Alexia gave us bad debt. And well, I always prefer that you see you move chronologically, okay, from the top down. So yes, the bad debt is an expense, but let's hold on until we get to that point. So Prof. Frank, your expense, moving from top. Please unmute. Your mic is muted, so unmute. Okay, actually, okay.
I'll see the general expenses.
Okay, general expenses. General expenses. Please, okay, so that is here, 6,000. Prof. Ashley, what will be your expense? Okay, depreciation on motor van. That's what Ashley has given us in the chat. So depreciation on motor van. That's 8,000. So you see, it's always important you start from the top, pick them one by one, okay? So that by the time you get to the bottom, you are satisfied. If you pick them randomly, the possibility that you might skip an expense is very high. So take your time, go through the list one by one. Your expenses are at the debit side. So the first is depreciation on furniture and fittings. Second is depreciation on motor van. As you move down, you see general expense. General expense is 6,000 Ghana cedis. After that, the next is discount allowed. Discount allowed is 4,600. Next is delivery expense, which is 3,000. We have insurance, which is also 2,700. We have our bad debt as given by Prof. Alexia. Bad debt, which is 1,900. Advertising, 3,320. And rent and rates. And rate is also 5,000 Ghana cedis. Then we have salaries. Salaries 6,000. Carriage outwards 2,750. The next is the interest on loan. Wow, this question has plenty expenses. Interest on loan 5,000. And motor repairs 1,850. Also have bank charges, the fees the bank is charging you for the services they are rendering you. That's bank charges. So we have bank charges 3,000. And then I believe, okay, drawings, investment. So that's all for your expenses. So let's get the total expenses. So total of all these figures, that is 58,120. So interestingly, our expenses this time are more than the income. So it means we are going to get a net loss. And I think professors had net loss, and that's great. Hoping that the figure will be the same. So we have a net loss of 28,000. 28,000. Okay. So you indicate net loss 28,000. That is it. How many of us got the figure 28,000? Okay, quickly let's go through the balance sheet. So balance sheet as at 31st December 2008. So we start with our fixed assets, showing the cost, accumulated depreciation, and net book value, NBV. Now, most of our fixed assets have been adjusted with the depreciation already. Okay, so we can put the NBV straight away there, or you can show the cost. So we have furniture and fittings. That's the first fixed asset. Depreciation has already been deducted, so the net book value is 25,000. Right. Then, motor van. Same, depreciation has already been deducted, so 32,500. Okay, apart from these two, do we have any other fixed assets, professors? Sandra, Fang, and Ashley. Do we have any other fixed asset we have to bring in here? So let's go through. I think, yes, we have the investment, which is 35,000. So these are fixed assets, right? If you want to show the cost, then you show the depreciation, because the depreciation were 5,000 for furniture, and motor van was 8,000. So when you add them to the net book value, you get the cost. So 30,000 for, and then this one will be 40,500. So you can show the cost like this. But if you don't want stress, you put the net book value straight away, since that is what was given. The depreciation was deducted and the cost was not given. So you can save yourself the stress. If you bring it, it doesn't change anything. So let's get our total fixed assets. So total fixed assets will be this plus this. Okay, so there we have it. Then we go on to the current assets. So current assets, we have, like I tell you, the stock, which is the closing stock, 19,500. The debtors. So our debtors figure, if you have seen it, you can assist me. I'm struggling to see my debtors figure. If you have seen it, okay. So it's like we don't have debtors. Great. So if you don't have debtors, you don't stress yourself bringing any debtors. There's no prepaid expense accrued income. So we go to the bank and cash. Do we have bank and cash? Bank and cash. No. So our current asset is only the stock, right? So you move on to less current liabilities. You don't need to bring the total because it's just a single item, right? So you go on to less your current liabilities. In this case, which will also be your creditors. And I'm not too sure we have creditors, right? Right. There's no creditors. There's no bank overdraft. There's nothing. No current liability. Wow. So if there's no current liability, so that would be dash or zero, giving us our working capital. So our working capital will be 19,500. We add it to the total fixed asset to get our net total assets, which will be 92,500 plus 19,500. So 112,000. That will be net total asset. So the point is, if the items are not there, please don't insert anything. Okay, pick the items you have there and you are good to go. Okay, now we move on to the financed by. I'm sure some of you didn't do the balance sheet because of this items that were not available. So capital is 100,000. And as you know, we less drawings and add the net profit. So less drawings. And this time it was a loss. So we are going to less the net loss as well. Okay. We add when it's a profit. If it's a loss, we less. So drawings is drawings is 10,000. The net loss as we had was 28,000. So let's adjust that figure. We'll come to a net capital of 62,000, right? Then we add the long-term liability, which is the bank loan. We had a loan, and the loan is 50,000. So we add it together and we'll get a capital employed of 112,000. And I think one of you had the balance sheet correct, and that is very good. That should be Prof. Dameki if I'm accurate. So this was your balance sheet. A very weird balance sheet because you didn't have most of the items like the debtors, creditors, etc. Okay. So this the solution I was expecting from you. So I'll mark your responses, let you have your feedback. But is there any issue that I have to address? If you have any question, if there's any question for me on this particular question, if you have any issue. Okay. So thank you very much. I think we would continue in the